So, hello, and a massive hello to everybody. No trade calls, no recommendations. 30th of November, 2016. Here we go. So, fifth update of the day. It's been a long day. Welcome, everybody. Good to see some usual suspects in here. Hammer time in the house. So, good to see all the weekly room guys make it. So what's going on here? So let's just go through the recap of the day. So if anybody has any comments, any questions, anything they want to look at, just shoot. We'll do it. Any trade anybody's managing, just let me know. If not, I'll just go through the main things we discussed today, right? So in terms of more active trades, more actives in intraday setup, we talked about the fact that the most interesting thing for us was the NASDAQ to the short side and ES, and basically to look for acceleration to the downside on equities, right? So NASDAQ, I mean, you can't really ask for more, right? What we talked about as we're coming into these highs, we said, you know, as long as this holds, we'd expect this to start to sell off aggressively. And don't be surprised if all those levels get taken out and we come right back to the opposite side of the range, right? You see how we accelerated extremely quickly, and the first attempt to base, right, was right into the level. So this is important. Just as we discuss, you need to learn to identify these ranges and understand when you've got a chance of seeing velocity of move inside range, and that even if you want to get long, there's no point trying to get aggressive unless it comes back to the opposite side of the range it's trying to clear, okay? So going into tomorrow, it's going to be very interesting to see how this trades. We'll go back on the longer time frame, but again, fairly classical action. Then the other thing we looked at, and this was actually shaping up exactly as we were doing this, we said, right, 1 hour negative close, it's a short, right? It's a short, and we're looking for overnight lows to get taken out and possibly path of least resistance to take out previous day lows. But again, our base case is for a move back into 2190s. So again, hasn't got as much traction as the NASDAQ, but again, fairly classical action. We really can't complain on that. And then I can't remember who asked us about the USD CHF short on that 1 hour, which is in play, right? 1 to 3 RR on that, pretty much got two times risk, 1.5 times risk, and that's in play. Now, yeah, I mean, crude, look at how close it came into that 50 and then just sold off. So right here, we wouldn't be surprised to see this try and clip these lows, come right back down here, possibly all the way back into the 45s. Again, not something which we're trading actively today, but we said wait towards the announcement if you're going to try and do anything, right? Exactly. So again, if you've got anything you're focused on, you want to trade, let me know. If not, we'll just go through some of these other charts we discussed today. So the other one we were talking about was gold, right? And basically was the fact that we expect this to put in some kind of a bottom. And we said on yen, on gold, we could try and probe these extremes into the end of the month on month-end flows. But what's going to be interesting is, you know, the day closes and the weekly closes. And here you see gold is holding very heavy here. When it trades so heavy, you got to think it really wants to clip these stops, right? It really wants to clip these stops. So again, you have to focus on what happens here in terms of action. Any hold below, especially into the open tomorrow, you'd expect to see any rallies to try and be shallow for a move back into that 1150. If we hold back above, or you start to see a break below, failure to hold below, and you know 1 hour candles, 4 hour candles starting to look like this, then there's a good chance that we reverse. But right now you have to be cautious because it's looking particularly heavy. ES, as we said earlier on today, it would be particularly constructive for the shorts if we could get a day close back below the 2200. So right here, again, no change in outlook. As we said, we'd expect, as long as those highs hold, as long as we hold below the 2200, we'd be looking for price to try and come back into 2165s, back inside election day range. Crude, as we said earlier on, you know, the highs or the lows are what are most interesting for us to look for selling opportunities. I would have preferred to sell this higher. I didn't do anything here. But right now, as long as these highs hold, you should not be surprised to see this come back into at least the 47s, if not lower. Again, a lot of the things for the market to digest, it really needs to settle. Euro USD, we've talked about the fact that as long as the 105.50 into the 105.00 area holds, we'd expect this to try and rotate higher. A lot of people are trying to make a big deal out of this Italian referendum. We'll have to wait and see what happens. But here, it still looks like it's not getting traction to the downside. So we'll have to see if after the month-end flows are going, it can finally free up some space and move back into the 107, 108. But right here, we're exactly the same discussion we had, we had today, earlier on today, right? Quite nice action. You see off that press into those lows, we actually popped about 100 and now we're about 40 off those lows. So it's not that bad, end of month flows. Yeah, exactly. On the NASDAQ, again, you see this this failing pattern at highs. It's our favorite trade on the board here, looking for this to reverse lower, then possibly all the way back down. So this remains our favorite trade. USD index, what's going on here? Again, we discussed this with Anna. It's a tricky one. It's a process, but as long as these highs hold, we expect it to try and reverse this correction. Again, our base case is for now that the month-end flows are going, we'll try to correct closer to the FOMC. Again, if you keep in mind, if also you see the comments on the wires, we're seeing a lot more concern for USD strength. So expect to see that popping up more and more in the news. So that's definitely something to keep an eye out for. Yeah, what's going on the Dow? Let's get the Dow up. Just going to try all the weekly webinar subs are holding their breath, wondering if I'm going to start ranting on the Dow. Not today. I don't have enough energy for that. But again, the Dow is still holding particularly bid at highs. So, I don't know. Do you have a specific question on it? I mean, to us, it still looks extended. Key zone is this breakup area. If you look at the move from lows to highs, you see that the 50 back is coming in here. Seeing the strength of this move, you'd expect this area to get front run. So you'd think any kind of reversal, it's all about that range from the election day, right? So again, for us, it's the same discussion across the equities, right? It's the same thing. And if you look at the charts, if you look at the equities, it's still all about those highs, all about a healthy move would be a retracement, and all about a potential move back into the election day range. Does that make sense? So for us, the decision then is, assuming that it's pretty much the same chart, it's pretty much the same dynamic across the board, right? Whether you're looking at Russell, whether you're looking at Dow, whether you're looking at the ES, whether you're looking at the NASDAQ is, which chart would you rather use to express that opinion? Okay? So for us, let's do it quickly. S&P, NASDAQ, Dow, what time, let's just look at it on a weekly, right, for the hell of it. Dow, NASDAQ, and ES on the weekly. It's probably not the best time frame. Let's try and go to the monthly. Does it make sense that the Dow is the strongest one, right? Strongest one all the way through. Second strongest, still below last month's high. So all things being equal, the NASDAQ is the weakest. So a lot of the times, we feel that a lot of the less experienced traders would be eager to get short the strongest or long the weakest because they think they get the better bang for their buck. Whereas we prefer to look to get short the weakest and long the strongest, if you see what I mean. So it's pretty much the same discussion across the board. It's just that our favorite chart is the NASDAQ because it's the one that's the weakest. So we expect that if the selling pressure comes back in across the board, since that's already the weakest rather than the other ones catch up, we'd expect that to lead. And if I had to go with something that is strong, I'd much rather get short the Russell than the Dow. I hope that answers your question. It's just a question of the best way of whatever way you want to express that view, right? Again, yen similar to that gold. We discussed the fact that above those highs, it could continue to extend back to the 116 very quickly, right? And there's no point really trying to chase it to the downside as long as it's holding bid. You know, you want to wait for it to get weak. Again, if you're looking to get short here, if you're still holding longs, then you've got chance Momo's going to be on your side. But very tricky trade location. Okay. Any comments, any questions, anything anybody wants to look at, anything anybody wants to discuss? Don't be shy. You know, I think the important thing, as always, is to just, as we said earlier on, is to try and identify the, you know, you don't have to trade, right? So the point is to try and identify the best opportunities, try to identify the best risk reward, try to identify the best location, and then, you know, decide whether it's worth expressing an opinion through a trade. Now, I think what a lot of people get carried away is they think that just because you see something happening, you have to trade that. Just because you're analyzing a chart and you may have an opinion on what's happening, you have to trade it. You know, we strongly feel that as a trader, once you're a lot more experienced, you need to be very, very content to look at, you know when you're fairly solid, I think, is when you're looking at a chart and you see what is likely to happen and what you think is likely to happen. But you don't trade it because it doesn't meet your risk reward profile, it doesn't meet your setup, whatever. And then you see that play out exactly the way you thought it was going to play out, but you don't care, right? You absolutely no emotions. You really don't care because it just didn't fit your trade profile. You know, you have to be selective in what you're looking for, right? And it's the same thing if you look at the equities, right? You know, we're looking for those and we see opportunities for those to retrace. You know, we're not going to be long all the equities. You know, we tend to pick our preferred player, the one where we think we've got the best chance of expressing the view the way we see it, which in this case was the Nasdaq, and we do the Nasdaq, and you see it accelerated a lot more than the ES, all things being equal, right? So, ES down what, 0.2 on the day, Nasdaq down 1.2, something like that. And again, not everything works. It's the same thing on the euro, on the yen, et cetera, right? On euro, our expectation was to be up, and on if that was going to materialize, most likely yen was going to be down, right? But that doesn't mean the yen was simply not an ideal location for that. Euro was an interesting location, chance to be nimble on the trade, but still it's not playing out. It's just going to take some time, but that range is still holding. So as long as it holds, we understand things could be very, very slow. You just have to be patient, as we've been discussing all day. So it's not real rocket science. It's just trying to have a systematic approach to what you're doing. Be disciplined. Be realistic with your expectations. Understand that probably the biggest downfall for everybody is just sizing. People just get sizing wrong. They trade too big, and I think a lot of the other reasons why traders have a hard time, if you boil it down, it all boils down to size, really. The reasons why you don't get your size wrong could be very different, but that linked with unrealistic expectations. So yeah, exactly. So again, and the point is, not every trade is going to work. Nobody wins 100% of the time. The idea is to only get flesh wounds when you lose a trade, to be able to fight another day, right? And if you can fight another day, well, that's what we're here for. Exactly. Yeah, and again, tomorrow should be fairly interesting. I mean, in terms of the, keep in mind we've got non-farm payrolls, so a lot of potential volatility. If you look at the daily charts here, what seems to be interesting is that, you've got that negative close on the ES at highs, which is going to be particularly interesting. Nothing too interesting on yen. Possibly something interesting shaping up on gold in the following days. It's quite interesting, the fact that euro is holding those lows, right? Interesting that, yeah, exactly. Interesting that crude's trying to, actually it's not here, but it's the crude's getting sold off, and we'd expect a little bit more downside. But it's as we said earlier on today, daily closes and then how the week close, how the week is going to close with that non-farm payrolls. But our expectation doesn't change, right? We just have to be patient and see how it plays out, okay? So guys, thank you so much for sticking it out, spending the day with me, and I'll post the recording for all the guys that missed it. Have an awesome one. Heads up for a lot more wheeling and dealing into the end of the year. It should be a fairly interesting one. And I'll post the recording on YouTube. And again, thank you so much for all the support on the blog. Thank you for liking the stuff. Thank you for retweeting. In general, the support. Thank you so much. It's always very much appreciated. Okay, guys. Thank you so much. Talk to you guys soon. See you guys tomorrow. Bye-bye, guys.